Welcome back. Now, acquisitions and increased two-part claims volumes helped boost Alexforbes' top-line growth and trickle down to the bottom line, with headline earnings per share seeing a 15% rise during its annual period. Operating income, in the meantime, is up by 13% on account of improved new business flows and inflation increases in its retirement and healthcare consulting offerings. Investors also receive a special dividend of 10 cents, along with a total dividend payout of 55 cents. That's up by 10%. Company CEO Dawie de Villiers joins us with his assessment of the performance. Dawie, thanks so much for your time this afternoon. And let's start there with that payout. The group has declared a final dividend and another special dividend. Talk me through the factors that influenced that move when it comes to the special dividend in particular.
Thanks for having me. Yes, we've been on this journey of capital light, returning cash and extra capital to shareholders, and we've basically ended that journey, except for an extra 180 odd million that was paid back to us during this financial year as a result of an old claim that we had with an insurer. We went to court and they basically lost the case and they had to pay us the 180 million. It was an old claim that wasn't settled properly, and we made good, obviously, to the clients, and the insurer paid. So that's the extra cash, and as part of our capital light journey, we're returning that to the shareholders.
All right, let's look at the year that was. While some macro risks still remain, Dawie, would you say that the trading environment has somewhat improved, just considering how well markets have been doing?
Yeah, I think that's true. Certainly, the biggest factor is optimism. You know, we as the market participants are and corporates operating in this environment are positive about the environment, positive about what the future holds. And certainly there's some green shoots. I think the environment itself is still very tough, So I think the market reacted on the positive future outlook. Okay. But certainly the environment is still very tough as we speak.
And looking at sentiment, that optimism, how's it played out in your investment segment? Talk me through some of the trends you've spotted between the institutional investor and the retail investor over this period, especially because, we saw a downturn before the election and then we saw that optimism kick through post the national election.
Yeah, I think there's a few things. You must remember macro high level. We've got a declining interest rate environment, which is always good for companies and for the equity market. So that's one of the big drivers. But then, as we say, it's a lot about sentiment. The last few months have been very volatile, obviously, with Trump, with the US, with the GNU, with the tax and the VAT and the budget appointments. So that was in itself a difficult time. But as we say, I think the effect on the markets is overall a catch-up that the South African market is looking for, and therefore it behaved quite positively. The hiccups in between with the trade and certainly with the budget, I think the market has looked through again, and we have high hope. So the volatility will remain. I think all the investors must know the volatility will remain. What we're doing in the funds is trying to do, and looking at the market is still trying to diversify. The one area where I think one could look at to diversify away is the massive effect that the US has on any portfolio. It's a big portfolio, so even if you're on weight, the US is a big component, and it looks like they're in for a difficult time, and we should diversify a little bit away from them.
All right, let's move over to the two-part system. There you also saw it boost your top-line growth. Talk to me about what you've been seeing playing out there from the 1st of September, it was, right, when that came into play. There's also been concerns, Dawie, around the amount of withdrawals that we've been seeing taking place. Are you still seeing that uptick coming into 2025 as well?
I think that it's moderating. So let's
Okay.
start there. It's definitely moderating, and what it was intended to be, it is now become. You know, and I want to start there because it's actually a very good news story. Um, People have a rainy day fund, and if they save a lot, they can access it, and we're seeing more and more of that. You know, there's obviously a small percentage of people that take everything that's in there when it's at their disposal because they have the need, but more and more it's being built up, you know, for a rainy day fund, and we see people behave that way. The initial problem we had is, you know, we had a seed capital coming from the funds that you've already saved, and that there was a big withdrawal there. But that is kind of out of the system now, and now, you know, we'll get to a stage where it's much more palatable.
Okay.
So I think I actually believe, and we believe, that it's great for the financial services industry. People are, you know, what's the biggest problem is people aren't engaged with their savings. You know, either they don't save at all, or they're just apathetic to kind of, you know, this withdrawal that comes out of their pension fund. Now people care. People know exactly what's in there. You know, they know how much they're contributing. They know the effect on it on the market. They understand when the market is up on a period of time, or when, you know, something positive happens in the economy and the effect that it has on the investments. And that is a big one. That's a philosophical win that we haven't been able to crack in the last 50 years, you know. So Two-Pot gave us that, and now we must just build on the momentum through advice and through proper engagement with individuals, and we have those tools now. So I think it's a very positive thing. We've paid out, you know, 7 billion of claims, 7.7, almost 8 billion rands of claims, which is a big amount. But in the bigger scheme of things, I think, you know, a small initial amount, and from now on, as I said, people will start saving more and think about their future more, which is the positive.
And quickly before I let you go, you talk about increased engagement, Dawie. I'm assuming that that probably means that there are more costs associated with increased engagement between clients and agents. How have you been managing to balance out those costs or mitigate those increasing costs?
It's actually the other way around. You're 100% right. We've always tried to crack that problem to say, you know, how do we speak to more people, but it costs too much and nobody wants to really pay for that, and therefore you don't get the benefit. What's actually happened with Two-Pot now, a lot of the engagement is digital and electronic. So the basic knowledge, you know, and we had to build that, which is absolutely wonderful for the industry. We had to build it for Two-Pot, and now we kind of nuancing it and making it even better. So the the first level of questions and knowledge gaining is part of the system, and is part of, you know, an electronic, and then when people want more advice, or they want to change their contribution, or they were thinking about different types of death benefits for different dependents, you know, then there's an advisor available. But now it's also a lot easier, and because we, you know, certainly from the Alexforbes side, because we do it for people whilst they're saving in their retirement funds, and we have that cost already, we also make that available to them on an individual basis, which saves us some money.
All right, Dawie, thanks so much for your time and taking us through the year that was for Alexforbes. That was Dawie de Villiers, CEO of Alexforbes.